Welcome back. And we're going to be starting right here with a major vote failing in the Solana ecosystem amidst a major price crash in the overall valuation of the crypto. Now, we have been covering Solana very extensively more recently, and especially talking about kind of the downtrend in Solana. It's very interesting because, as you guys know, I have never invested or held Solana since it launched, right? I used to call it made by and for the billionaires, right? That's FTX created this coin for. And so, over this previous bear market in 2023, 2024, kind of seeing the price movements increasing substantially, having better price movement than any other cryptocurrency in the market, going from $8 to $260. I was like, oh, everybody's speculating on the technology they're going to be releasing. Well, they did release technology, and that was called meme coins, and that was quite the epic failure. And so we have been seeing a major drawdown in the price since the meme coin slowdown. Well, there's been a lot of kind of contention in the ecosystem of Solana to upgrade the protocol. And some are claiming it's going to centralize the protocol, at least some of the upgrades that have been proposed. And that brings us to today's story. And don't forget to give this video a free thumbs up. Also, hit that subscribe button if you want to help support the channel. Click the join button down below to learn more about becoming a channel member. Or you can use the super chats in the comments below. Now, Solana has, been basically talking about this Solana improvement proposal, basically called SIMD 0228, and that would reform Solana's inflation levels. And just in the last couple of days from when I'm recording this video, they had the vote on chain. And while there was a lot of support for the vote, and we're going to be getting into the specifics of that in just a minute, ultimately, this proposal failed, and the inflation, or as some call it, high inflation, will remain status quo for now. And so I'm going to walk you through the actual vote. I'm going to walk you through what the inflation looks like, and we're going to look at it all on chain. So a contentious effort to reform the blockchain network generous inflation regime flopped after supporters of this proposal failed to garner the supermajority they need to implement the major economic change. Now, I believe supermajority is over 50%, but it may actually be over 60% based on whatever the protocol rules are. The surprise result delivered a blow to the Solana power brokers who rallied to replace Solana's static inflation mechanism with a market-based system, right? Going from just kind of a fixed, this is what we're going to inflate, to based on what the market is and what the market is doing. Their proposal likely would have cut the network's inflation 4.7% annual staking rewards down to 1%. So on one end, the inflation rate would be slowing down, which if you're a holder of the coin, we know this from the dollar, right? The more they inflate, the more value you lose in the underlying asset. Now with the dollar, because there's so many dollars out there, when they print it, you don't necessarily feel it. But we did feel it over when they printed $4 trillion during the pandemic, and then we had the inflation about a year and a half later, right? We did feel it then. So it can occur, and this is what we see in these cryptocurrencies when the price goes higher or lower. Sometimes it goes lower just based on the inflation mechanism, because if you're inflating and putting more coins into the circulating supply, that would effectively bring the price down. Because remember, these coins, the market cap is what is based on the circulating supply, not the maximum supply. So it doesn't matter how many coins are going to be at fully mint or fully released. It doesn't matter what that number is. It matters what the number is now and what the number is going to be. And we used to talk a lot about this with Cardano, because the Cardano ecosystem, and we are going to be talking about the price in a little bit with Cardano, and we will talk about the inflation mechanism there as well, because that could potentially be affecting whether Cardano is able to break out of these support levels or not. And so we used to talk about Cardano's inflation a lot. I used to tell my viewers, 1 billion coins a year is what Cardano was inflating in 2020, 2021, 2022. And a lot of the people in the ecosystem were like, no, Cryptoviser, we're not inflating that much. It's not that bad. And it's like, no, it is that bad. That's a lot of coins to be inflating. Now, granted, those coins were going to stakers, but are stakers actually growing the network, or are they just extracting value from the network? Well, if stakers are just sitting and keeping their coins in a staking pool and not actually participating in transacting or payments or DeFi or anything else, It's kind of dead weight. And this is the big difference between previous cycles and this cycle. This cycle is different, guys. And every cycle going forward is going to continue to be different because right now they're talking about inflation and the circulating supply or the maximum supply, how many coins are going to staking. There is going to be a day, right? I think Cardano, the actual circulating supply, if you continue to go at 1 billion coins per year, where it's like 2030, the money runs out. And so then the network, and Charles has talked about this before, specifically with Cardano. He has said that eventually the fees of the network will pay the validators and the stakers, right? Right. And the mechanism is going to change over the course of time because, if you look at like Ethereum, where do Ethereum rewards come from? They come from transactions and transaction fees and stuff like that. Granted, there is some inflationary mechanism there, but they also burn coins at the same time to offset that inflation. So yeah, there's big differences between these ecosystems, but a lot of similarities, and that's why this vote is so important because it's not really about what the vote was; it's really about what the future of the network is going to be. Now, keep in mind, right? If you're a staker, you don't want the inflation rate to change because then you're going to make less. But if you're a validator of the network, like an actual node operator, yeah, you do want the inflation rate to go down. If you're just a holder of the coin, you do want the inflation rate to go down because otherwise this negatively impacts your holdings, right? So the total supply in Solana is 596 million coins. The circulating supply right now is about 85.5%, right? 509 million, which means there's about 14.5% not circulating or not yet released in the circulating supply, not part of the market cap. So if they were to dump all these coins into the market, for instance, this would effectively, just based on the laws of supply and demand, decrease the price of your coin by about 15% because you would be injecting this much more coins into the network if you did that all at once. The current inflation rate, according to Solana Compass website, is 4.661%. The initial inflation rate was 8%. So you could see it's already basically dropped in half. It's showing the final inflation is going to be 1.5%. And they wanted to drop it down to 1%, apparently. And this failed. So in a contest that pitted Solana influence leaders and investors who claim the network's high staking rewards are bad for Solana's price. Against small-time operators who feel the effect of a big cut to their revenue, their opposition rallied hardest this past week as late voting validator ballots broke heavily in favor of a no vote for this specific vote. So, yeah, basically, Solana validators are only called upon to vote when the network is grappling with a major economic change, according to Solana Compass validator. This proposal is the third ever such vote to appear in records by staking facilities. Its controversy sparked the highest turnout vote in the network's history. Over 66% of validators cast votes, two-thirds. Together, they yielded 75% of the network's voting power, a remarkable share given voting in the decentralized system is voluntary. Of the participating validators with 500,000 Solana or less, 500,000 Solana. Let's just do the math on that to understand the numbers that we're talking about. 500,000 Solana times $133 is $66 million. That's we're talking about now people who are below this threshold. Over 60% of those voted against this proposal. Larger validators saw the exact opposite. Of those with more than 500,000 Solana, 60% voted in favor. So think about that. The validators voted in favor of reducing the inflation, but the holders, right, people with $66 million or less in Solana, they voted against it because they're probably earning most of their passive income from their Solana in the staking mechanism. So they don't care. They're just extracting value from the ecosystem, especially during a bull market. At least that's my viewpoint on it, right? Maybe they're not actually doing that. Anyway, Tushare Jain, who is a co-founder and managing partner of Multicoin Capital, major crypto firm, said this proposal was a historic milestone for crypto. Even though our proposal was technically defeated by the vote, this was a major victory for the Solana ecosystem and governance process. Over 74% of stake turned up to vote on the proposal. Yes votes were 43.6% of the stake. No votes were 27.4%, and 3.3% abstained. So think about that. More actual votes were for yes for this proposal to be implemented. But because it's not a super majority, they were not able to get this vote passed. This is very interesting because what this says is that the validators, the network operators, who historically in most of these crypto ecosystems held all the cards, no longer, it appears, hold the cards, because now it looks, at least in the Solana ecosystem, based on this vote, that there is a spread between the actual validators of the network, right, the whales, and the actual network. The wealth distribution is more spread out. And this is very interesting to see, especially in Solana, where there are still a lot of big whales. And even though all these big whales voted, they still couldn't get a supermajority. And so with other ecosystems where, you could have a supermajority just from the founding entities, right? I mean, I would imagine in the Cardano ecosystem, you have a supermajority from the early founders and early team members and engineers. Probably within 10 people, they can basically control where the network moves just based on votes. And again, that's just my assumption on it. Bitcoin, I don't think that you could do that. Although some would argue if you took all the US companies together that own Bitcoin, they would have a supermajority vote. But anyway, moving on, he said, to put that in context, this proposal was the biggest crypto governance vote ever by both number and participants and participating market cap of any ecosystem, chain, or network. Solana's market cap during this governance debate was comparable to Bitcoin's market cap during the mid-2017 block size wars. This director at Multicoin Cap said, if this vote tells us one thing, it's that the state of Solana's network is strong. This was a meaningful scaling stress test, and the network passed despite a wide stratification of diverging opinions and interests. And then he goes on, yada, yada, yada. You guys gonna get it. So this was the actual vote right here. You can see here on Dune Analytics. Let's put this in dark. There you go. So 911 validators voted, 74% of the entire staked vote voted, and you can see 43% voted for this proposal to pass. With an inflation reduction, 27.4 said no. And again, it did not pass because they didn't have a supermajority. So interesting stuff happening in the Solana ecosystem, especially just during this price downturn.